What's up, you guys? You got Rick here again. This week we're going to talk about investing for beginners and how I personally invest in the stock market. So if you're interested in getting started with investing in the stocks as well as doing so for free, feel free to stick around and I'll go and teach you how. Thank you. Okay, so this week we're actually going to talk about how to invest into the stock market for free. There's actually no barriers of entries for this. Yes, really. I broke this video down into 3 parts. Now, it's one, choosing what to use to get into the stock market. So this is going to be an application, a service, a broker, anybody that you use or anything that you use to actually gain access to the stock market. The second thing is how to actually fund your investing portfolio. This is something that I personally have a method to that I'll go and share later in this video. The third thing is actually research, because you don't want to just buy into anything. You want to buy into something that you know. So keep tuned, and I'll go ahead and get started. What is a stock? Now, a stock is a piece of a company that you own. Now, for example, let's say Apple, in a hypothetical situation, is worth $1,000. The market values this company at $1,000. Now, let's say it's a public company. That means each stock is valued at $1. That would mean that there is 1,000 shares outstanding, 1,000 stocks outstanding of that company, which gives it an overall market cap of $1,000. So let's say you buy 5 stocks, which costs you $5 of Apple. All of a sudden, the next year, Apple reports that they beat their earnings by 50,000% and they're now worth $1 billion. So that means your stock has now 1,000x. So now your stock is now worth $1,000. Or if you have 5, it's now worth $25,000. Does it make sense? So that's why stock markets is a pretty good investment, especially if you just want to do it passively like I recommend. What I mean by that is I don't buy low and sell high. I buy low and never sell, because I believe the stock market should be treated as a secondary savings account. Just have it passively invest and only pull out if you want to actually buy a big purchase like a home or something like that. It's really up to you, but you really don't want to pull out before a certain time period, because then you might be hit with short-term capital gains, which means if you pull out within a year, you're actually going to be taxed more on that profit you made on that stock, whereas if you would have waited longer than a year, you would be taxed at a much lesser percentage. This is called capital gains tax. So I won't explain this in this video, but if you're interested, go ahead and take a look online, go ahead and Google it. For the sake of this video, I'm going to keep it very simple. Buy, never sell, okay? Now, step 1 is you want to choose a method to invest into the stock market. Now, me personally, I have used Ameritrade, Scottrade, and now finally I use the RobinHood app. Now, the reason why I like the RobinHood app and what makes it different from the other services that I mentioned is that it's a $0 commission, meaning that whenever you buy a stock, the money that you're paying is only going towards the ownership of that stock, and you're not paying any fees to the brokerage, such as Scottrades or Ameritrades, to initiate that trade for you. For example, Scottrade charges $7 a trade. So if you bought a $300 Tesla stock, it would actually charge you $307, because that $7 has to go to Ameritrade or Scottrade to allow you to buy that stock. So I never really liked that, so that's where RobinHood comes in. RobinHood actually charges you $0. It's a free app, and it's something that I use pretty much on a weekly basis to check my portfolio. So if you're interested, I do have a link in the description that will give you a free stock if you sign up through my link. This stock could be anything. It could literally be an Amazon stock, which is worth $1,000, or it could be worth a GE stock, which is about $30. If you're interested in getting started and you don't have a method of investing yet, I really recommend RobinHood, and please use my link in the description to get started. Thanks. Second thing is how to actually fund your investment. Now, me personally, this is how I do it. I have RobinHood set up to do an auto withdrawal from my savings account. So every month or every 2 weeks, I pretty much withdraw about $100 a paycheck. So that way I'd pretty much have $150, $200 every month to invest into a company that I believe in. I strongly recommend doing it this way, especially if you already have a savings account that you're pretty much funding every month, because it becomes very easy to just transfer from your savings into stock, and it really hedges your wealth in a lot of ways. Which means if you have $200 sitting in your savings account, it's not really doing anything in your savings account. You might as well take $100 of that dollars and invest it into GE or Disney and allow it to appreciate whenever the stock does well later on in the market. So that's what I'd recommend. Set up auto withdrawal, and do an amount that you are comfortable with. This could literally be like $50 a month. $50 a month over a year turns into a lot of money. It turns into something, especially if you're investing passively into a company that is doing really well, like Amazon, for example, could really turn into something that could be a very, very valuable piece of property for you. So that's what I would recommend. Set up auto deposit, and I promise you will not regret it. The third thing is, once you have your account funded, what you're going to want to do is actually research companies to buy into. Now, me personally, I'm an engineer. I work for a technology startup. So I love reading about companies that are technology focused and things that have to do with the technology space. Meaning, I invested into things like Zendesk, Facebook, Salesforce, Domo, BlackBerry, pretty much all these different tech companies because I know about them. I know how the company is supposed to look. I know how the profits are supposed to be. So I invest into them whenever I believe in a company and I believe in the direction that they're taking. So that's what I would recommend to you. I have friends that buy into Nike, that buy into Under Armour, that buy into different fashion brands because they're really into fashion, or they might be really into shoes, for example. You might have companies that buy into Maybelline or these different makeup companies when you love makeup. It's really up to you. But what I would recommend is only buy into a company that you use personally, that you know whether or not they're heading in the right direction. Because you as a consumer, if you use their product every single day, you know whether or not they're improving or they're going down. So if you know of a company that you really love, look up online, see if they're public, and if they're at a good price right now, if it's a company you love, go ahead and buy a stock. Buy it, hold on to it for a month, see what happens to it. Start seeing if the value goes up or goes down. If it goes down, don't worry. Realistically, year over year, the stock market performs at about 8 to 10%. So that's much better than any sort of 0.01% you get in your savings account. So that's what I'd recommend. Research your company, pick something that you love, and go ahead and buy that thing. Alright guys, I really hope you liked that video. If you did, please let me know by giving this video a thumbs up. If you want to see more additional content, of course, feel free to subscribe. Don't forget to follow me on Instagram, @RickTheMovie, on Twitter, @RickTheMovie, and of course, right here on YouTube. If you want to see any additional content, you can check out my other playlists where I go into the Amazon business and how I've lost $4,000 so far, and how I hope to recoup that in my next update. Thank you so much, and we'll talk soon. Thank you.